Good morning and welcome to the ADS Securities Markets Update. In line with our estimates and in our previous reports, the US dollar finally gave up its gains and broke through its trend line as support and continued to decline further toward its 50 and 100-day moving average, which basically stands around the 96 areas. However, yesterday's close was at the 50-day moving average and slightly below the 100-day moving average, which may support the index for the next few hours. But the Chinese devaluation, or the Chinese Yuan devaluation, keeps the pressure on the Federal Reserve not to raise rates, and therefore the US dollar may continue to decline in the next few days. In the meantime, a break through the 96 support area may clear the way toward 95.30s, which basically stands here, and it is also represents it 61% from the latest bull run from June's low to almost July or August highs. Our favorite pair also, which is the British pound, finally also advanced yesterday above 1.56, reaching as high as 56.30. This is despite the fact that the jobs report in the UK came in with a weaker than expected figures. However, the decline in the British pound also yesterday was also limited above 1.5550 before breaking above 1.56. The UK jobs report might have also showed some disappointment reading, as the year-over-year earnings and the employment change also declined by more than expected. However, the year-over-year earnings slowed down for the first time after 3 months of consecutive gains toward 2.4% in June, down from 3.2%, while the estimates pointed to a slowdown toward 2.8% only. Looking at the employment change, it declined also by 63,000 in June compared to 67,000 in May. But the good news came in again from the unemployment rate, the wages, or the core wages, or which basically wages excluding bonuses, and finally the jobless claims data. The unemployment remains steady at 5.6% as widely expected. The jobless claims declined by the most since April, and most importantly, the year-over-year core earnings, or the year-over-year earnings excluding the bonuses, remained steady at 2.8%, which is the highest since September, or since 2009, and since also the crisis. In the meantime, the British pound also again needs to break above 1.56 again in the next few hours, in order to clear the way toward or above 1.57, 1.58, and possibly 1.59. But again, yesterday's decline was limited around 1.5550. This is because of the 50% retracement from the previous day, from 10th of August lows to 11th also of August highs. So basically, for the time being, as far as this level continues to hold, in addition to this level, which represents also another support area, which we've seen it in Asia, the outlook remains also on the upside. As for today's fundamentals, there are no significant economic leads from Europe. However, all eyes will be on the US figures, including the retail sales, the core retail sales, in addition to the import price index and the business inventories. And these are likely to be the top and the major catalyst for today's volatility. A disappointing reading also, or disappointing outcome, would clear the way, or would weaken the idea for a rate hike in September by the Federal Reserve, and therefore the US dollar may continue to sell off further. Finally, the euro also rallied yesterday, following the major sell-off in the US dollar, and reaching our expected target mentioned in our previous report, which was around 1.12. However, the pair eased back during the end of the US session and during the Asian session back toward 11.30. However, the outlook remains bullish also on the short term, and the current decline is seen as a usual retracement after 6 consecutive days of gains, and is likely to be again limited above 1.1077 for now. And on the upside view, 1.12 and 1.1216 could be seen again, followed by 1.1280. This is it for today. You can follow us on our social media sites, Twitter, Facebook, and YouTube, to get the latest economic releases, reports, and analysis. Thank you for watching. I'll see you once again tomorrow. Have a good day.